We're going to start off here with Harrison's financial planning topic of the week. We're going to talk about what is an accredited investor and essentially what does that mean to you as an investor. So I'll give you the floor here, Harrison, kind of probably chime in with some questions and comments around what you're talking about.
So, I mean, the technical definition to be an accredited investor, you can either qualify based on your income or your assets. So it's somebody who has, as a single person, at least or by themselves, $200,000 a year in income or $300,000 with a spouse, or your net worth is over $1 million, not including the equity that you have in your house. So if you are that, you're technically, or you can be considered an accredited investor.
And that includes retirement accounts, I presume.
Yeah. So basically investable assets in excess of $1 million. So what that means is you have access to private investments, so securities that are not registered with the SEC, private REITs, private equity, hedge funds, things like that. And a lot of times people get attracted to those because they have potentially higher rates of return, but they also, I mean, being unregistered, they have much higher degrees of risk, whether that's because they are illiquid, whether that's because they are not very transparent because they don't have to disclose as much information. And in many cases, you have the potential to lose everything that you invest in. So maybe higher returns, but definitely a much larger degree of risk. However, that doesn't mean that there's fiduciary advisors out there that don't sell them. In many cases, there are fiduciaries who offer these products, which is always kind of interesting because, I mean, on the fiduciary standpoint, just because somebody is a fiduciary, that doesn't necessarily mean that, you don't have anything to worry about.
Yeah.
As I mentioned earlier in the show, I mean, they're being a fiduciary or saying that you have someone's best interest in mind is subjective at best. So, like we're fiduciaries, but there's also different capacities that you can operate as a fiduciary. So Chase and Brent, you guys are fiduciaries because you're registered with the SEC, you're registered investment advisors. So when you are giving investment advice, which when you're managing a portfolio, when you're choosing what to buy and what to sell, that's investment advice that you are providing a service for, you're acting as a fiduciary.
Yeah.
I'm a fiduciary because I'm a CFP, and all I do is engage in financial planning with people, and when I am giving advice in that regard, I'm acting as a fiduciary. So there's a lot of different ways that you can act as a fiduciary, but there's also advisors out there that say they are a fiduciary, but they're not acting as a fiduciary when they're making a recommendation or selling something. So that's a couple things to keep in mind. Again, even if they are acting as a fiduciary, that doesn't mean that's the right thing to do. And then in many cases, if they are acting as a fiduciary, they might not be at that time. So back to the accredited investor, again, you have access to these things, but just because you have access to them doesn't mean it's something that you should, strive to invest in or strive to, I don't want to say take advantage of, but because we have people that are like, oh, well, now my portfolio is this large. Now I'm an accredited investor. So now I need to, do something a little bit different. Not necessarily. You never have too much money to, lose money. So
I think it's a great sales tactic, quite frankly. People like to feel special. It's like, oh, I'm going to sell you this private REIT because you're special. Mm-hmm. You're an accredited investor. And you're like, ooh, that means other people don't have access to it. It must be good, right?
Well, and I'll say this. Chase and I and Brent, we are on paper accredited investors, so it's not like we're jealous because we're not a part of the members only club. I mean, we fall into that as well, but we don't have any private investments or anything that we personally invest in. We don't recommend that people do that either because we have just seen so many cases where people have lost a lot of money, lost everything, or they don't even know how much money they've lost because they can't get access to it.
Yeah, and it could be, there's some I've seen where it's 15 years ago, and they're supposed to have an exit point 10 years ago, and it never happened. And it's awful. I would never recommend this to people. And I forget, there's a saying out there, and I forget who said it, but it's keep it simple, stupid. I don't know where that came from, but that is my philosophy when it comes to investing. We talked about that earlier in the show. Real estate, stocks, cash. That's it.
Simple. Again. Now, in choosing which of those different things to buy, like which stocks, which real estate, all of that, has its own nuances and complications. But the point is, you don't have to go and rewrite the book. You don't have to reinvent the wheel and say, okay, well, now I have a certain amount of money. Now I'm going to do something different over here. Buying good companies it works, and it's always worked, and it's probably going to continue to keep on working.
Yeah, and I loved the point you brought out about the fiduciary status, and I've had issues with the fiduciary status for years, and what I mean by that is, looking for a fiduciary is not a bad first step. I'm not going to say, oh, you shouldn't work with a fiduciary. Yeah, we're fiduciaries. I think that is a good first step, but as you said, it now needs to go a step beyond that, because just because somebody's a fiduciary doesn't mean they have the same investment philosophy. Ultimately, you want to find somebody, if you're looking for somebody to hire to manage your money, that you understand and you agree with their investment philosophy. Because I'll tell you, we differ with so many other fiduciaries in terms of how we would do things.
Yeah, I mean, we talked about it a lot. We don't like annuities. We don't like permanent life insurance. We don't like private investments. There's plenty of fiduciaries out there that do. And if they can make the case that that really is in your best interest because of X, Y, and Z, especially on the case of the private investment, since it's unregistered, you have very little recourse if something does go wrong.
And I know we had a client, and I don't know the validity behind this, but the guy said he was a fiduciary, and he was recommending an annuity, but he was recommending to take a surrender charge on an annuity because the new annuity had a bonus on it. And it's like, I would never make that recommendation, but this guy was supposedly a fiduciary.
Well, I looked into it. So that guy was a Series 65 license, so an investment advisor. But in that context, I don't think that's in the realm of investment advice, going from one fixed annuity to another. I don't think that constitutes investment advice. So in that regard, I mean, he wasn't a CFP, so he wasn't any financial planning things related. So, he's a fiduciary. In that case, he wasn't.
Yeah.
So.
Yeah, I mean, you just have to be so careful because people toss that word around so lightly, and I'm glad people brought it, I guess, to the forefront years ago about learning about fiduciary status. I mean, shoot, you're a fiduciary on a trust, right?
Mm-hmm.
If you're settling an estate.
Right.
I mean, it's an important word, but at the end of the day, what is the ultimate philosophy of that person you're working with? Because, again, I think more and more people are going to become fiduciaries, but that doesn't mean that should be the end of your research and working with somebody.
I would say it is a prerequisite. If you're going to work with somebody, you probably want to make sure that they are a fiduciary, but that's definitely not enough.
Yeah. And I would definitely say, I mean, back to kind of tying in the accredited investor, be careful. Just because you are an accredited investor doesn't mean you should utilize those credentials at the end of the day to buy crappy products.
Mm-hmm. Which you don't know they're crappy or not, because in many cases they're not very transparent. So
yeah, it can definitely be rough long term. So long story short, be careful. And that's where I guess having a good financial planner like yourself is so important, because you don't sell anything. I mean, when somebody brings you the numbers on a product that somebody else is trying to sell them, you'll objectively break down the numbers. You'll talk to them about their risks. You'll tell them, hey, this is what it looks like if you want to do it. And ultimately, it's their decision to make. That is the job of a true financial planner, is to actually look at the situation, give people a number so that they can make a good, informed decision on how that impacts their financial plan.
And to really break down the actual numbers, because in many of those types of things, you might see numbers, but numbers can be misconstrued in a lot of different ways. Like, cap rates on real estate, cash flow, appreciation, financing levels, whatever it is. You can make numbers look however you want to. So, having somebody with no bias to say this is the cost and this is the benefit, does that make sense? Yes or no?
Yeah. Yeah, and ultimately, you can't make the decision for people. It's still up to them. But again, you actually give them real numbers to work off so they can make a good, educated decision. And again, if you want a consultation with Harrison and learn more about his financial planning services, give us a call at the office here. It's 858-224-0004, or again, you can contact us at the website smartinvesting2000.com.